Shares of Vista Outdoor are up 8% in May, and they just reported record profit margins, while big box peers like Target and Walmart have taken hits on theirs. Joining me to discuss is Vista Outdoor CEO Chris Metz. He is live down at the NYSE at the company's Investor Day. Chris, thanks for taking the time. Welcome.
Hey, Kelly, it's good to be here, and certainly nice to be at the New York Stock Exchange live rather than virtually.
Absolutely. Amen to that. Tell me profit margins just off the top of your head. I mean, are you guys still at sort of a acceleration in profitability because of these pandemic trends, or can you just describe what's been going on there relative to others?
Sure. So, Kelly, we guide to 15 to 20% EBITDA margins and long term. And this year we've guided to low 20s EBITDA margins, so certainly exceeding the high end of our range. But there's no question that we're being benefited by the diversity of categories we're in. So, you know, we've got some businesses that are selling at lower price points that aren't faring as well, but we've got a lot of businesses that are selling at different various higher price points that are doing fantastic and really lifting the entire company up to deliver the type of continued record results that we're seeing.
What are some examples of that? I mean, again, you guys are exposed to so many different parts of kind of the outdoor and recreation space, but you, I'm sure, also face supply chain disruptions. This is a popular demand source after all. You have labor as well to contend with. Why are you not seeing more of a squeeze?
Well, Kelly, I mean, like everybody else, we certainly are feeling the squeeze, but we made a strategic bet about a year ago and really leaned into bringing in more inventory, thinking that our bets in inventory and some of the new products, innovation that we developed would continue to pay off, and it's paying dividends for us right now. So take one of the acquisitions we bought, Foresight Sports. Foresight is the leader in launch monitors and golf simulators. So the PGA Championship that just happened this past weekend, the majority of the golfers are using our technology, and we leaned in and we brought in chips that help run those products. And we've got a number of other categories that we leaned into as well. So although we see some of the same squeezes other companies are seeing, we also are benefited from a long-term bet on some strategic inventory.
If that's working so well right now, why split the company?
Well, it's a good question, and we feel like that despite the value that we've created, and listen, we've been rewarded. Our stock went from a low of $5 to the $38 it's at today, but over the same period of time, our multiple is compressed from 10 times EBITDA to the 4 times it is today. So we just felt like although we're generating great profits through terrific execution by our talented management team, we just felt like splitting the company up into very distinct asset classes would bring in a whole different universe of potential investors, as well as potential companies that wanted to be a part of one side or the other.
Do you worry that your company could face a post-pandemic cliff once that inventory gets right-sized? If there's a fall in demand, maybe that's just delayed by a year or two?
Well, you know, listen, it's a question everybody asks, and we study really, really hard participation rates. And just about every category that we are serving, all the categories are up in terms of participation and showing no signs of slowing. So although, you know, some people think it's going to be an upward V, we don't see that at all. And our demand and our forecast proves this out. You know, we're continuing to see a more normal growth rate, but at an elevated rate because participations are high. People want to continue to get outdoors and recreate. And to the extent that inflation continues and people are hit a little bit harder, the first thing they're going to likely give up is expensive vacations and more durable, higher priced goods products. But our products, 80% of our products are consumable, easy to buy, easy to use, and fun to use.
Very interesting. I don't know if you sell axes, but we did try axe throwing over the winter for the first time. And I enjoyed it. I was kind of good at it, to be honest. It was a surprise. Chris, thanks for joining us. We'll let you get back to it. We really appreciate it. Chris Metz is the CEO of Vista Outdoor.
Shepard Smith here. Thanks for watching CNBC on YouTube.